We've been covering crude, impact on crude, and what a potential war-like situation in West Asia could play up as far as crude prices is concerned. Let's get in Vijay Bhambwani, who's the author and CEO of BSPL India, joining us on the show at this point. Vijay, thank you so much for taking time out. I want to begin by asking, what are you making of the volatility in crude prices? $4 a barrel up, $4 a barrel down, closing at about 97 as of yesterday. Is the volatility likely to continue?
Good morning, and thank you for having me on your show. I overall remain of the opinion that there is no super cycle in crude prices. Yes, there are supply side constraints due to shortages created by output cuts. The current war in Israel will add to upward pressure on crude prices temporarily. Much will depend on what happens with respect to Israel versus Iran. If the fighting is restricted to Israel fighting Hamas and Hezbollah, then I think crude prices will gradually settle downwards. If at all Iran is to get into the picture, if Iran is to enter the theater of war, then possibly Iran will resort to what they have done in the past, threatened to mine naval mines being put in the Strait of Hormuz. Now, this is a choke point, a relatively narrow water body through which 22% of global crude oil flows via sea, and 18% of global natural gas flows again with via tankers. That's not to say that there will be no passage of crude at all, but A, they will require naval escorts. B, they will require higher insurance premium. C, the cost of operating in an endangered war zone invariably pushes up the risk premium. So crude oil prices may go up sharply, but temporarily, if Iran was to step into the war. Should that not happen, then I guess the crude prices will settle gradually lower. Do remember, crude markets, though radar sensitive, are also very
Well, it looks like we've lost Vijay. My colleague Kartik is also with us in the studio. Kartik, it appears from what Vijay has been saying so far is that if Iran is involved, there could be a temporary
and
upward movement in crude prices. I think Vijay is back with us. All right, we'll get Vijay back, but Kartik, if Iran were to be involved, there could be a temporary upward movement in the crude prices, major blockade by the way of supply chain, but that's about it. No long-term impact?
So, Shweta, as we see it, I think Iran, maybe not directly as a state, as a country, but there is this indirect support to Hamas already offered through Hezbollah by Iran. So, for all practical purposes, Iran is very much part of this conflict already. Now, there are multiple other factors also playing out in the world right now. There is a voluntary crude oil production cut happening in the Middle East and happening in Russia as well. You've seen the OPEC bloc cutting oil production. You've seen Russia cutting oil production. So this, in any case, has been adding pressure to crude over the last couple of weeks, as we've seen. Now, there was a little bit of consolidation that we saw last week, but with the war, it has suddenly escalated again. The war has escalated, and proportionately, even the crude prices have escalated. Now, the question that begs to be answered is that are we going to see a Russia-Ukraine war-like oil price again when it had touched almost the $120 per barrel level? Now, if you were to contrast that with what happened, let's say, at the start of COVID, if you look at the chart here on the screens, you will see that when March 2020, the world realized that COVID is a present and clear danger, oil prices had actually bottomed out. And at that time, there were supply chain shocks due to which there was excessive oil available, for countries to pick up, but countries were unable to pick it up because of the supply chain disruptions. So we had actually seen crude bottom out to about $20 per barrel, and thereafter it has been rising. That peak that you see on the chart actually happened right at the start of the Russia-Ukraine war in May last year. After that, we've seen, while there has been a sharp correction, it has been on an upward rise because of the voluntary cuts that we've seen in oil. Now, for all practical purposes, Iran is already a part of the war. Saudi Arabia, another major oil producing bloc, will it actively be part of the war? Militarily, it won't, it cannot, it doesn't have an active military. But all oil flowing into Israel from one side from Iran, from another side from Saudi Arabia, Israel, the ports in Israel being a constant sort of conduit to transport this oil back to Europe. A lot of European oil demand in the wake of Russian sanctions have been flowing from the Middle East. In fact, the entire IMEC, which is that cooperation economic corridor between India, Middle East, Europe, and thereafter US, all of that as a response to China's Belt and Road Initiative is actually being built on account of the fact that you need lesser trade barriers when it comes to oil flowing between Israel, sourcing this oil from the Middle East, flowing from Israel in oil containers all the way to Europe, and then from Europe beyond all the way to the US. So overall, I think Saudi Arabia is going to be more critical to watch for right now, and its relationship with Israel, and therefore is trade going to continue or get impeded is something we'll have to see. Iran, for all practical purposes, is participating in this war, if not directly, then definitely indirectly through Hezbollah. And we are seeing that there is this this shock right now on oil prices. And as Vijay was just mentioning, those prices could, with active participation of the rest of Middle East, only go up. Now, my question to Vijay is, I believe Vijay is back with us. Hi Vijay, Kartik here, good morning. I want to understand from you, are we likely to see the same levels on crude oil as we had seen at the start of the Russia-Ukraine outbreak?
Well, with OPEC led by Saudi Arabia issuing a statement that they are ready to open the taps should there be supply shortages, I think if at all we reach there, it will be more like a photo opportunity, a temporary blip up rather than a sustained $120 plus level on WTI. I don't expect it to go there in the first place, but if it does, I would be happy to short there with a very patient outlook.
All right. And with respect to participation of the rest of the Middle East in the war, we already know that Iran via Hezbollah is supporting the cause of the Hamas terrorists. So we know that Iran is in some way already a participant in the war, if not actively militarily, then at least with financial aid to Hezbollah. Iran, which again is backed by Russia, backed by China, already playing its own game in the war. So with that in context, how do you see Saudi Arabia and oil flow from Saudi Arabia flowing into Israel and from Israel to the rest of the world taking a beating on prices?
You see, if we were to take this current situation in 2023 with a linear comparison to 1973, the Yom Kippur War, a lot has changed. Now, you have Israelis warming up to diplomatic relationships with the UAE, Israelis talking to Saudi Arabia for re-establishing diplomatic relations. Benjamin Netanyahu in October 2018 flew into Oman and had a cup of tea with Sultan Qaboos in an unplanned visit. So the Arab world is now a lot more open to the idea of peace, and the Arab Spring had a lot to do with it. So I don't think you'll have a broader participation of the Arab world in this war, as you saw in 1973, unless a very new development like nuclear weapons or some mass-scale chemical weapons are used. So I think this will be a fairly narrower conflict as compared to 1973.
Okay, and specifically, with speculation or with anticipation, perhaps negative anticipation, if I can add, of ports in Israel being attacked and being bombed, that becomes obviously a trade restriction, a trade barrier. So will that likely have a far more devastating impact on oil prices?
In the short term, yes. I think in the absolute near term, for a couple of weeks, you could see oil prices spike. But then let's not forget, markets always plan ahead. The very fact that you're seeing very alarming videos of mass-scale rocket fires and bombings, etc., the markets have already priced in that probability. So if at all there had to be large-scale panic, it would have started seeping into prices, which it hasn't.
Okay, so before we let you go, Vijay, one more question from me, specifically on inflation concerns. I think we all understand that oil prices are directly linked to inflation numbers. So soaring oil prices If it reaches the $100 barrier, it is already a problem for India. But even for global economy, and therefore global economy, oil shock, higher inflation becomes a double whammy for India in any case. So how do you see the inflation story panning out if the war were to continue for an extended period of time and is not a short-lived outbreak, because we've already entered day 4 of the war, so it doesn't look like it's going to de-escalate anytime soon. So if the war continues at this pace, then how do you see global inflation panning out with respect to oil prices?
I belong to the school of thought which believes that inflation will be sticky. It's not transitory at all. I've been saying that since late 2021. Let's not forget the way the Russia-Ukraine war is resulting in supply chain disruptions in food. So you have oil, you have food. The worst kind of inflation is food inflation. You can't negotiate with demand for food. It's an essential item.
Absolutely.
So 2023 and 2024 will see higher inflation worldwide, not just India, worldwide. We'll have to learn to live with it. Unfortunate, but true.
Okay, and should voluntary cuts by OPEC and Russia now be eliminated? Is there room right now for any voluntary cut in production, given that oil prices are likely to rise in any case, and the price stability that they were hoping to achieve with oil cuts will in any case naturally stabilize?
And just to add to that, how significant a player is Iran in oil production? We know it's been ramping up its oil production, but if Iran is involved and the possibilities of which are panning out in that terrain, what sort of impact are we looking at as far as crude supply is concerned?
See, as a veteran oil trader, I take all these output cuts or output hikes with a gunny sack full of salt. The Fragile Five, which Iran is a part of, is a chronic violator of OPEC quotas. They exceed their quotas flagrantly. And even when output cuts are enforced, there are, under the radar supply chains that keep working all the time. So oil markets are an enigma. They are about geopolitics. They are about terrorism. They are about supply and demand economics. They are also about what is known as marginal factors, which don't appear on the books. So I think these output cuts may be all good in theory, but there are then discount rates to the rack rates. Then there are alternate supply chains which don't really report the amount of oil exported. That will continue, which is why I said, give me $120 a peak that Kartik mentioned about. I'll be very happy to short with a very patient output.
All right, Vijay, thank you so much for taking time out from your busy schedule this morning. Appreciate you having us on the show. But Kush continues to be with us. And Kush, let's take that question with you and let's come back to India. What sort of impact are we looking at if crude breaches the $100 barrel a mark? We know that the likelihood of which is not unlikely given the volatility in the past couple of weeks. What happens thereafter?
The way I see it is the fact that this will certainly hurt our import bills, but it may not really have a very significant impact on inflation. And the reason for that is that this is I think we can safely call this the election year. Perhaps about 12 months away from election from here in any case. So the impact on the ground may not be as direct or as big, even if we breach the $100 mark. So from my perspective, even if we get there, I won't be too worried from the inflation perspective.
Okay.
Although yes, some of the stocks will start feeling the pain for sure.
All right, and definitely a cut in the excise duty that government is hoping to collect on oil, because it will have to incentivize oil if it wants oil to be continue to sell in the territory that it's selling at the moment if the oil breaches $100 a barrel mark.
Yes, Shweta, and what we are seeing is that the upstream oil companies have also been benefiting quite a lot. ONGC, the stock is at an 8-year high. ONGC is at 8-year high. Oil India is currently, I think year to date it has returned about 50% or so. So Kush, what's your outlook on these upstream oil companies which have been benefiting from a surge in crude prices?
Well, I've not been a big fan of the, oil sector, anyway. there is a news-based movement that sort of comes out. There's a trend that sort of emerges and then sort of dies down. So as far as the likes of ONGC, Oil India, these stocks go. Currently, yes, they've been benefiting, and we've seen the kind of uptrend that's already underway in these stocks. So I wouldn't hesitate participating in them as long as the trend is intact. But once that sort of dies down, these are not my regular or top favorite picks. So if I were to give a very specific view on ONGC, then 180 to 175 is the kind of near-term support zones that we're looking at. As long as that is held, I wouldn't mind taking a long position here and ride it all the way to 190 and 198 kind of levels. So yeah, I mean, as far as the trends no harm in riding there.
What about the downstream companies which have been reeling under the pressure, and especially since they have not been able to pass on that surge in crude to the end consumers?
They are my second least favorite, if that's even a thing, after the Australian companies.
Oil is not well with Kush Bohra.
Not been wealth creators for anyone, right? I mean, in the long term. So as you can see, right, some of these have actually broken down below the support level. If I look at something like a BPCL, 340 was a very strong support zone from the medium term perspective. It sort of breached that as well. So not a big fan. These are perhaps some of the stocks that we use as hedging opportunities in our portfolios and in our advisory services. So once the crude is, or the oil is on the boil, these actually turn out to be a good hedging opportunity by short selling them. So yeah, not a very big fan of the entire play. But yeah, if you want to look at a hedge against your long positions, HPCL, BPCL are some that you would want to consider.